Hope you're doing well. Risk sentiment overview for the 13th of the 9th, 2022. Got CPI today. Now, you probably were aware of that already, but do note that you might not be aware of is that the risk calculation had a huge knock on the 24-hour difference. And the only way that you get access to this is by subscribing to the Quasidb service. And we have a huge heads up on the move, out days in advance. We could probably argue maybe a week in advance. We had the big shift on the 24-hour difference. I was saying how we could potentially be bottoming on risk, and we did. So it's quite a good advert for the Quasidb service. And so what we want to see ideally is another big shift or the 24-hour difference, and it's going to push this back negative. And if we go negative, it tells us that the retail guys are net short. If they're net short, then they're going to be trapped. And if they're trapped, then price is going to go up to punish them. And you can maybe argue price is going to go up anyway because there's quite a lot of positive stuff going on with Russia and Ukraine. There was footage of the tanks, the Russian tanks had just been abandoned. And it looks like Ukraine, they're winning their battle. So if it continues, Putin might just withdraw. And he might just focus on his economy because the sanctions are probably going to be hurting him, and it might have to, what's the word? He maybe needs to capitulate with his gas pipeline, and it might not be too much of a worry for Europe during winter. So it's obviously a big deal that's going on with Russia and Ukraine right now, and so markets are going to be cheering on that development. Unfortunately for the retail guys, they're short, but we had the big heads up last week that they were selling and they got caught. So we had the huge heads up on that. And if you want to see, just go back to the videos from last week, and you can see the 24-hour difference and how they've started to short it. And if they continue, we'll continue higher. And unfortunately for them, we've got a fundamental reason to rally as well. So be careful. VIX did rise quite a bit as we went into the close. They released the news media. They released the China-Taiwan news. China are building up some resistance, military resistance or something. And so that did rise quite a bit yesterday. So we've got to be a bit concerned with that. And we're not out of the woods yet because of the big picture. But I think tomorrow we're going to be risk on, okay? Because it's going to shift that into negative, and that indicate that the net's short. So lots of information to unpack here. Fundamentally, we could be quite strong. Sentimentally, we're quite good for long as well, for bullish risk. The yields are completely out of bonk, but I think this is CPI uncertainty. So there isn't anything to be said about that. I think the bond traders were just hustling back and forth yesterday, and they didn't really know what to expect today, and no one really knows for sure. But this is a little bit out of whack, and this is totally out of bonk as well. And the only way that I think this is going to come down is a weaker USD, and then it'll bring those yields down ever so slightly, and then hopefully we'll get some normalization on that curve, and then we're going to be risk on from a bond yield perspective. And if this does get stabilized, and this we don't see an inversion, this is going to be we'll probably get to all-time high on risk. So once this gets fixed, then we'll probably rally. So I think a weaker dollar is going to help here. So there you can see the risk, the shorted risk. So there's German 30, France 40, S&P, US 30, oil as well. And they sold it for whatever reason they wanted to sell it, but maybe it was news related. Unfortunately, I think for the DAX traders, they might be getting squished. That fundamental news about Russia and Ukraine. So, they moved quite a lot on their shifting from last Tuesday. Now, there's the dollar weakness. So the dollar Swiss is the standout, as we can see here. And the Euro USD is the strongest. So with a big turnaround on the technicals, you need to subscribe to the Quasidb service to see our trade of the day. It has a USD component in it, so we'd have to be careful because of the CPI later. And if you want to get access to the trade of the day, it's just go to the patreon.com Quasidb, and then you click the QDB Daily Bulletin Access, and it's quite affordable. It's about 33 pence a day, something like that. It's quite cheap, very affordable. It's less than the price of a chocolate bar by far, and you get this bulletin, a document to support this video, and the trade of the day as well. And I'll supplement analysis for that trade signal as well. Today's caveat was the CPI, so I won't record today's trade of the day on the sheet, but it's going quite well, and because there's quite a lot of fear, I think, and that's causing it to rally quite a bit, because obviously the retail guys, when they're fearful, they sell, right? And the CPI is a prime candidate for fear, right? So we do see lots of opportunities, but we have to be very careful. That's how we stand right now, but what happens over time, we don't know unless you get the FXCM trading station, which is that thing down here. So get a copy of that. It's absolutely amazing. 100% recommend it. And after this bulletin, I'm going to do a quick 2-minute video to cover this. And I'll cover the US 30, German 30, and gold as well. So they sold it, up we come. They sold it again, up we come. However, they're going long. But we have to remember, potentially this is going to be rallying due to, you know, the optimism from Europe and Ukraine. So we have a fundamental reason for this to rally. At a high level, it's a buy, because, you know, they're net short. If they're reducing that volume, then it is a risky sell. And that's what I mean by risky. We want the two things to align. See, it's a risky sell because it, you know, at a high level, it's a buy, right? If it was a sell and then they added, then it wouldn't be a risky sell, but it's a buy at the high level. So it's quite strong, and up we come, right? So, and also remember to check Twitter as well, because there's a lot of bearish sentiment on Twitter, and that helps push price higher. Even these guys with their qualifications and certificates, they're bearish because they're looking at technicals. We have to remember to look at sentiment and the fundamental flows as well. And we had a big heads up on this move last week. So just go to my videos last week and you can see the development of the sentiment and how price responds to the sentiment. Likewise, a little bit of caution here at the hexagon, but I'll cover it anyway in the Discord, in the private channel. Likewise, German 30. This is going to probably ignore the retail sentiment. It's probably going to rally on the fundamental flows, for that reason I stipulated about Ukraine, and I'll become. But don't forget, at the high level, it is a buy, 41% long. Now gold's going to be naughty, like it was yesterday, but you want to get a copy of this trading station so you can see the development over time. So they shorted it, and that explains why the price went up. If you didn't have access to this terminal, you might have sold it and thinking, why is it coming up? Well, it's going up because they sold it. So it explains a lot to do with that frustration you might have encountered yesterday. Why is it going up? It doesn't make sense. But look, they're selling it. Right now they've gone long, so we should, in speech marks, be falling. So the level of interest is 1725-ish, and that area here is a little bit naughty if we continue higher. However, we've got the CPI, and it's going to be moving commodities a great deal. So it's a good advert to get the trading station, and it's free. It won't cost you anything, and you can just create a demo account, and it works. So EU's undecided, worth mentioning, and the largest mover is GU. Largest stock loss cluster is AU, and it's located there at 66.85, and the size is smaller, 5.19, and so we could potentially be at a tipping point on EU. And that could be like the low, the bottom, potentially. And the key here is to get the things to align. So, see, GU isn't aligning, but the dynamic flow is saying buy. If it continues like this, like tomorrow with a big shift, it's going to flip GU into a buy at the high level. So then it'll be green, green, green. See how the dynamic is really, really powerful, because it helps the big picture. Helps us know which way the big picture is going to go by looking at the flow of time. So this is positioning over time. This is the high level, and EJ and GJ shifted towards sell. So if it continues, we'll shift over 50%, and then there will be a sell. Okay, so try and get the two things to align. Yeah, so there's quite a lot of things that are being naughty, but it is like a big day today on risk. So it's telling us that the trap is being placed right now, and you probably wouldn't want to enter right now because it's worse odds in the casino. I had to double check this because we were 42.86% on yesterday's bulletin, and with exactly the same failure rate as we were yesterday. So that's a really strange coincidence. It's not a bug. The thing is working. I did a little test on it, and it is actually working. It's just a very strange coincidence that we were exactly the same as we were for yesterday's bulletin. So be careful because we're below 50%. That tells us that the retail guys are making profits on average because it's less than 50%. We'd want that about 70%, 60, 70, 80%, and that would be normal, telling us that they were getting, screwed, and they were getting destroyed, and that would be normal. We had GA, and we can see we did all right. There's the logic there: pound over here, Aussie over here. So we buy the pound, we sell the Aussie, and there's the logic, right? So it's dead simple. Doesn't require like a rocket science or anything like that. It's not brain surgery. It's buy that, sell that. It's dead simple. And things are moving, which is good to see, which is nice because they were really screwed for ages. They have a strong sell for ages and ages and ages. It's finally moving away. Economic calendar. Now, the thing of note is this, obviously, but be careful of the inflation rate tomorrow from UK. So I imagine this is going to go pretty crazy because this is going to be quite bad, and we're going to double-digit inflation. So that's quite bearish. So be careful of the pound. All well and good, you can trade it today, but do be incredibly careful because of this. Tomorrow, I'll probably avoid it, and we might be setting up for a sell-off if we rally really hard today, and it's going to set up for this event tomorrow, and that's quite bearish. And so we've got 5 hours time, so we've got lots of time. I'm probably going to avoid maybe trading, I think, and come back later. I want to sell gold, but I need to be keeping an eye on the sentiment, and so you want to get a copy of this trading station so you keep on top of the moves, and you can make a lot of profits as well using that terminal. So there's my links. Click those. There's the Discord, so join. If you do click the link, or maybe you won't, but you can't click it because it's a video, but if you type it in, you get free 24-hour access. Also, alternatively, there's a link in the YouTube video which you can click, and you get unlimited 24-hour access to the Quasidb service. After 24 hours, your permissions are removed, but it's a robot that does that. So you get 24 hours just to sample all the stuff that you get. So I'm going to quickly do a video now for the private members, and I'll speak to you guys soon. Trade safely today. It's going to be quite roller coaster.